I'm here with David Chan, Portfolio Manager, Private Equity at MLC Asset Management. David, welcome to the Inside Network's Alternatives Symposium 2026. Thank you for participating.
Thanks for having me, James.
It's a great pleasure. David, you've spent 15 years in private equity at MLC. How has your journey shaped the way you think about manager selection and portfolio construction today?
I think the most important lesson I've gained over all these years is really to be consistent and to have diversification. We've stuck to our mid-market strategy throughout the 30-year history of MLC private equity, and being the first institutional capital has really been a key differentiator of our program. Also, having diversification, both by vintage year, but also by sector and geography, has helped avoid a lot of those ebbs and flows and up and downs you see across market cycles.
Over that period, David, have you seen both the private equity market and the MLC program evolve, particularly in terms of global exposure, co-investments and conviction in mid-market managers?
Yeah, well, we try to have co-investments alongside sector specialists. And these are typically mid-market specialists where they've run larger businesses before, but now setting up a smaller, more dedicated shop. With that, they can add a lot of operational expertise and really help companies scale to reach the next level.
With the proliferation of private equity offerings into the Australian wealth market, what do you think advisors should prioritise when they're assessing managers, particularly looking at aspects such as alignment, sector specialisation and incentives?
We really focus on alignment of interest when it comes to picking our fund managers and the companies we invest in. That more specifically means that we want to see them investing a lot of their own money alongside us into their investments. For us, that's the clearest signal that they really believe in this opportunity. We also want to make sure they're not making a lot of money getting rich off management fees, but are driven by performance and delivering strong returns.
As the market has evolved here in Australia, David, fund structure has become a critical consideration, especially with the advent of evergreen vehicles and secondaries. So what are the key trade-offs advisors need to understand compared with traditional drawdown structures?
I think the most important and critical component is that liquidity available when you need it? Within our program, we've designed it so MLC is the seed anchor, which means that we're confident that even through market cycles, because MLC will keep their money invested, that liquidity will be available for other investors. With the other structures like offshore structures and interpost structures, quite often that liquidity can be delayed or gated by several months.
David, where are you currently seeing the most compelling opportunities in private markets, and how are managers creating operational value beyond any considerations of financial engineering?
I think with rising interest rates over the last few years, having a focus on real operational value add has become critical. One area which we're seeing great opportunities is in the crossover between infrastructure and private equity. Taking a IoT or a other operating company with a technical angle and then extending those contracts and getting longer term type revenue flows, reoccurring revenue, the types of revenue that an infrastructure or a tech buyer will pay a very high multiple for. With that, we can generate very high returns with a low amount of risk.
David Chan, MLC Asset Management, always a pleasure. Thank you.
Thank you, James.